In this video lesson, I will show you what is lot size calculator for the crude oil against the US dollar. Here we have a link below in the description for the lot size calculator, which will show you more details about this calculator, and also an article that explains how to calculate the lot size, and also an example how to calculate based on the risk and also stop loss. Here it is a little bit more details, but have in mind that this crude oil has some note, and that means for the crude oil the contract size defined as one lot is equal to 100 units of base currency, and that means the value of 1 pip will be equal to $1. Let's return here to the lot size calculator. I will explain this a little bit detail through an example. Here is the field where you need to enter the instrument. Then you have a deposit currency field where you enter which currency you would like to calculate this result, but most of the time I'm using US dollar as a deposit currency. If you have also any other currency, you can simply change that here with the drop down menu. In this open price, you can also set what is the open price and also the stop loss price, but there is an option that you can switch to stop loss in pips, and that means you can define a stop loss as a risk based on the account balance. I will leave this one because it is much easier for me to define the stop loss in pips to calculate the lot size based on the risk. So I will put here 100 pips. Then we have the account balance, which is set to $10,000. You can change that value to any number, but I have account open with $10,000, so I would like to calculate the risk with 10,000. Then we have here crude oil against US dollar, 1 pip size, which means 0.01 on the second decimal point. And that means when you go to the trading platform, here it is, the second decimal point, 79.48, the number 8 is the number of pip. So 1 pip. When this number changed to 8 to 9 or 8 to 7, that means the price is changed by 1 pip. Then we have a risk. Here it is field where you enter the desired risk that you would take in this calculation based on your trading account. So I would like to risk 1% of $10,000, which means I would like to risk $100. Here you can change in the US, which means instead of the risk in percentage, you can make that risk in dollars. So if I risk $100, that will be equal to 1% of my account balance. I will return this to the percentage because I like to use the percentage. Then here it is a contract size units per lot. Remember that this is a very important information, and this information is defining how much is one lot defined for the crude oil. So this means one lot, or the volume equal to 1, or the position size 1, means that you have 100 units per lot. And that means you need to go here where the market watch is and find this symbol here inside the list of this symbol. Click right mouse button on this crude oil and click specification. Then you will have a new window that explains what is the contract size with your broker, because any broker can have this different contract size. In my case, it is set that one lot is equal to 100 units. In the Forex pairs, usually here you have 100,000 units. For example, let's GBP Euro USD. Click specification, you can see that the contract size is equal to 100,000 units, which means one lot is equal to 100,000 units. Remember, that is very important information because this contract size you need to enter here to get the calculation correctly. Click calculate, and you will see that I have as a result here that my lot should be equal to 1. When I open a new trade and I put a stop loss to 100 pips, if I would like to get $100 as a risk on this trade, I should put lot equal to 1. Let me show you this on the trading platform. Let's open one order. Let's put here 1 because it says we should open 1. Let's open a pending order, for example, at the market price set to 78. Okay. Stop loss should be equal to 100 pips, which means we need to put here this to 77. That is 100 pips. Let's take profit set also to 100 pips, 79, click place. Here it is. Crude oil, the trade is open. Now let's check here on the trading platform what it says as stop loss that will be equal. It says you have defined 100 pips as a stop loss, and that would be equal to minus $100. So you can see I have defined a lot size here with a calculator equal to B1 to be on the safe side with 1%, which is $100 of my account balance. So you can also use this calculator to calculate any other stop loss value with any number of the pips. So you can use this calculator to calculate what is the necessary volume or the position size or the lot size that is needed to open order with the specified risk here. So if you have any questions, feel free to ask, and I will try to answer your question as soon as possible. If you like this video, click the like button and subscribe. See you next time, and happy trading!